So in the last class, we were discussing the topic of income under the head profits and gains of business or profession. And if you remember this structure which I told you, section 28 is the charging section, which tells me which incomes are taxable under the head profits and gains of business or profession. Section 29 tells me how to compute the income from business or profession. Then section 30 to 35 is having the expenses which are allowed as deduction. Section 36 also having the expenses which are allowed as deduction. Section 37 also having the expenses which are allowed as deduction. Expenses of these three categories we need to check for other sections also. Some of these expenses which are covered in section 30 to 35, section 36 or 37 might be also be covered in section 40 clause A, 40 capital A or 43B. So before deducting the expenses which are covered in section 30 to 35, section 36 and 37 needs to be carefully checked with respect to the provisions given in section 40 clause A, 40 capital A and 43B. If the expenses which are covered in these sections 30 to 35, 36 and 37 are also covered to be checked for the purpose of some additional conditions given in section 40 clause A, 40 capital A and 43B, only then these will be allowed as deduction when these expenses satisfy the conditions of these remaining three sections 40 clause A, 40 capital A or 43B. All the expenses which are covered under section 30 to 35, 36 and 37, all such expenses might not be covered in remaining disallowed sections 40 clause A, 40 capital A or 43B. But you have to carefully check, and you must not forget that there are some expenses of section 30 to 35, 36 and 37 which needs to be checked for additional requirement of section 40 clause A, of 40 capital A and of 43B. Only when the expenses satisfy the conditions given in these three different sections, then only these are allowed as deduction, otherwise not. Like office expenditure. If somewhere is written office expenditure, then that office expenditure is simple an expenditure which is allowed as deduction under section 37. And this office expenditure is not written in section 40 clause A, 40 capital A and 43B. So I will not check these three remaining sections. Just on the basis of section 37, I will deduct office expenditure. Second example, bonus to employees. Suppose bonus to employees is written. Bonus to employees is allowed as deduction under section 36. It is allowed. But this expenditure is also written in section 43B. So just because bonus to employees is written in section 36, I will not deduct it until and unless I check the conditions of section 43B also. If this bonus to employee meets the condition of section 43B, only then it is allowed, otherwise it is not allowed as deduction. So I hope the concept of these different 6 categories is clear. Please raise your hand if you have understood what I have said. I simply repeated what I have said earlier also. Okay, very good. So apart from these these 6 different sections 30 to 35, 36, 37, 40 clause A, 40 capital A and 43B, we have some special sections also. Those I will discuss after discussing with you these 6 different category of sections. So in the last lecture we discussed section 30, 31 and 32. So still I am at my first category of expenditure sections 30 to 35. I have discussed 3 with you of this category 30, 31 and 32. Now I am starting with section 35. So let us start writing my 4th expenditure section 35, scientific research expenditure. Screen visible? Please inform. I don't know whether I have shared it or not. Is it visible? आवाज नहीं आ रही अब?
Yes, sir.
Yes, sir.
So let us start discussing now section 35. What is the date today?
22 November.
22. 22nd November 2021. PGBP continued. And within PGBP, my first category is being continued, which is having the expenses which are having their own identity, own conditions, own computations. So in the last class I discussed with you depreciation, and now my fourth expenditure. So in this category I have discussed with you 31, 30 and 32. Section 35 now. Scientific research. Now, research is necessary for every nation. Society grows when research takes place. If scientific research doesn't take place, then society doesn't grow. We are in this globalized world where we can easily communicate. Now, the biggest example is that we are not wasting our time and we are discussing or learning something. You might be sitting in remote area of your country, in our country, not your country, our country. You might be sitting in remote area of our country. I'm in Delhi. You might be sitting in Northeast, J&K, Kerala, but still the session is going on. It happened because of research. Development is happening because of research. New and innovative ideas actually converts the ideas into reality. So now we have this high-speed network where we can communicate. So every businessman might be, or every businessman, or some of the businessmen might think of donation. They might think of donating something for scientific research. It might be their patriotic feeling that they want that research takes place. This will benefit their own industry also. Now research takes place at so many places. If I'm a company R Limited, it is possible that research is taking place in my own premises. In my own premises, research is being taking place. It is possible that Delhi University is doing some research. In Delhi University, we have chemistry department. Might be some research is going on in chemistry department. Commerce department, economics department, might be some research is going on in this area also. So research can go on at any place. Not only Delhi University, might be there is a company S Limited, a research company. This is a private company, not a government company, private company. This company is engaged in research work. Research might be going on in IIM Ahmedabad. Research might be going on in IIT. Research might be going on in some universities or institutions. Research might be going on in national laboratories. Department of Atomic Energy. So there are so many places where research is still going on. Every research requires funding. 300 crore, 400 crore. This might be the expenditure on any project. You send a mission to Mars, you need crores of rupees. Now government doesn't donate the entire expenditure on research. It's not possible. Government has to meet so many other expenditures also. So tax section 35 provide some incentive in this direction. Suppose this R Limited is a company, and this company has donated 1 lakh to Delhi University. Now it has nothing to do with the business of R Limited. Still, Income Tax Act says 1 lakh you can show as deduction, as expenditure on scientific research. So the Delhi University got the fund, and this donator, the person who has donated the amount, got the benefit. He can debit this expenditure on the debit side of P&L account, though that is not directly related to the business, but still, for those people who prepare P&L account, R Limited can be an individual also. If I'm preparing P&L account, that means I'm showing my business income or professional income. I can debit the donation which I am donating for scientific research purpose. This is what the benefit of Section 35 is. I donated 50,000 in my own industry. I have incurred some expenditure on my own for scientific research. That is also allowed as deduction. Expenditure on scientific research. So this is what we will learn. So let me share with you the Income Tax Act, and let me give you an idea how Section 35 is written. So give me some time. Let me open the website. Meanwhile, if you want to ask anything, you can ask. Section 35. I hope the website is visible. This is my Section 35, and you can see the heading, Expenditure on Scientific Research. Click it. Now in this you will find so many clauses. Section 35 subsection on clause 1. And it's lengthy section, it's not a small section. Clause 2, clause 2A, clause 3, clause 4, and then different exceptions also. You can see it's a lengthy section. Section 35 subsection 1A, subsection 2, and conditions. Subsection 2A, 2AA. As you can see, these words which I have told you, national laboratories. Just let me read for sample purpose. Where the assessee pays any sum to a national laboratory or a university or an IIT or a specified, etc., that the sum be used for scientific research. Now see, let me tell you something. If you say here what is written, in future when you start reading the act, just by reading the act incomplete, you will take wrong decision if you have not read the entire section. Now see, if I read this line, can you tell me what these four lines want to convey? Can anyone simplify these four lines for me or for every one of us? The purpose is not to tell you the provision. The purpose is to make you dependent where you can learn yourself. So the purpose of this higher education in college is not to simply tell you the provision. Now can you tell me what these four lines want to convey? Hurry up. Anyone who can simplify these lines?
So if any person is paying any amount for this scientific research to national laboratory or university or IIT, then he is allowed as uh, he can show this expenditure in P&L account by multiplying the paid amount into 1.5.
Any other? Any other who can want to tell something what is written? Nitesh, can you try what is written, Nitesh?
Yes, sir. Sir, when a person makes any donation or contribution to a national laboratory, university, or IIT for the specific purpose of scientific research, he can claim the amount. He can claim the such amount. But 1.5 times means like the amount he donated into 150% of that amount, only if it is approved by the prescribed authority here.
So that means I can say that if I donate 1 lakh to a national laboratory where my donation will be used for scientific research, I cannot debit 1 lakh. I can debit even 1,50,000, more than the amount of donation. I am donating only 1 lakh, but I can debit my P&L account not with 1 lakh, but with 1,50,000. Is it clear? Is it clear that yes, these four lines want to convey this example? If I donate 1 lakh, I can debit 1,50,000, much more than what is being donated. Yes, this is what these four lines want to convey, that whatever you donate to national laboratory, you can debit 50% more than what you have donated. But in our year, there is a change. So if I read it further, why I wanted to tell you this, that don't decide only on the basis of reading the four lines. You must read the entire section, because if you go down, what you will find, this line, provided further that where any sum is paid to such national laboratory or university or IIT or specified person in a previous year relevant to the assessment year beginning on or after 1st day of April 2021. So with effect from assessment year 21-22, the deduction under this subsection shall be equal to the sum so paid. Can you tell me what is the meaning of these three lines now? That with effect from my assessment year, which is 21-22, I will not get a deduction of 150%, which was there till last year. From now onwards, with effect from this year, the deduction is 100% of what you have donated. So if you have donated 1 lakh, the deduction allowed will be 1 lakh only. So what I wanted to show you is that don't simply take a decision on the basis of reading 1, 2, or 3 lines. Read the entire section, and then you will be able to exactly interpret that particular section of the any act. So with effect from this year, amount donated by businessmen for scientific research towards a national laboratory or university or IITs is 100% of the amount donated. If it is clear, please raise your hand. So the purpose was not to tell you the provision. Purpose was that you must read complete thing. For the time being, you have been reading only books. I have told you that shift towards the act. Now it is further expansion of this reading, that don't read only from the act, read entire section of the act and then you take the decision. Had I took the decision only on the basis of first 4 lines, my argument or debate would have been totally wrong. When I read the entire section 35 subsection 2AA, then I found that the deduction with effect from assessment year 21-22 for such type of donation is 100% of the amount donated, not 150%, which was there till last year. So just that was only one example. There are so many donations which are covered under scientific research. Let me start simplifying it. So now you can start noting down those donations. So let us move back to our screen and let us wind up section 35 today. So now I will write different categories of donation. So the purpose or the explanation is clear from my side. Now you must remember these provisions. So I'm continuing with scientific research. So within section 35, first donation, revenue expenditure incurred by the assessee himself. Might be assessee is not interested in donating to any third party, but he himself is incurring some revenue expenditure. So this is my first portion of 35. Revenue expenditure, revenue nature expenditure incurred by the assessee himself. All these are scientific research, that is sure. Assessor can be an individual or non-individual. 100% expense is allowed as deduction. 100% allowed as deduction. What is the expenditure? Now, so many times before commencing a business, so many times, suppose today the business is commenced. So many times before commencing the business, you need some prior planning also. You must be incurring some expenditure prior to the date when you actually commenced the business. So scientific research expenditure 3 years prior to the date of commencement. 3 years prior to the date of commencement are also allowed as deduction in the year in which business is commenced. Also allowed as a deduction in the year in which business is commenced. Not only current year expenditures, expenses which have been incurred 3 years prior to the date when you have actually commenced the business, all those 3 years expenditures which you have incurred prior to the date when you commence the business are also allowed as deduction in the year in which you commence the business. Because till you commence the business, in these 6 years, you must not be preparing P&L account, but expenses you were incurring. The government says for scientific research, if you have incurred the expenditure during a period of 3 years preceding the date till the date when you commence the business, all those expenses can be allowed as deduction in the year in which you commence the business. This is first category of revenue expenditure. Second category. This is the first category of scientific research expenditure, revenue expenditure incurred by the assessee himself. Third, contribution. Now not himself, contribution to notified university. Notified means notified for the purpose of this section 35 institution. Institution. 100% is allowed as deduction. If you are not incurring the expenditure on scientific research yourself, but you are donating to Delhi University, IIM Ahmedabad, Bangalore, etc. So these are some notified institutions. You cannot learn these. So in the exam you might find this word notified, because it's not possible to learn those notified universities or institutions for such purpose. But whatever you donate, 100% is allowed as deduction. 100%. Whether your donation is for natural science, where life is there, human beings, animals, or social science like economics, commerce, statistics, mathematics. It does not matter what type of research is it. 100% of donation towards these notified universities or institutions is allowed as deduction. Third, you might be donating to any company which is engaged in research. Contribution to a company engaged in research. A company to which you are donating is engaged in research, in scientific research. Here also government says it's not necessary that you only donate to the government institutions. If any private company is performing well in research, you can donate to that company also. Ultimately, when any outcome will come, the society gets the benefit. So here also 100% is allowed as deduction. Whatever you donate, 100% is allowed as deduction. Fourth, in the first, assessing himself revenue expenditure. Now, capital expense incurred by the assessee himself. Can you tell me any example? What type of a capital expenditure I can incur on scientific research? Can you think of any capital expenditure?
Sir, purchasing equipment for research.
Equipment for research. Any other? Any other capital nature expenditure on scientific research?
Sir, building in which the research is to be conducted.
Yes, very good. Building in which research will be conducted. Machinery and plant. Any other? Any other capital nature expenditure? Land. Is it clear? Am I right? Land on which this building will be constructed. It is also capital expenditure. Cost of land is capital. Cost of building is capital. Cost of plant and machinery is capital. Please unmute and reply. Are you agree that yes, these three are capital expenditure? Can be capital expenditure?
Yes, sir.
Yes. Excluding land, excluding the cost of land, other capital expenditure, whatever, 100% capital expenditure is also allowed as deduction. Excluding the cost of land on which you will construct a building to do scientific research, that cost of land is not allowed as deduction under section 35. It is not allowed as deduction. Excluding cost of land, whatever capital expenditure you incur yourself is allowed as deduction. And just like revenue expenditure here also, if today you commence the business, all the capital expenditure which have been incurred in the past 3 years, since during that year you were not preparing P&L account, you can claim those as deduction in the year in which business is commenced. Land, cost of land is not allowed. Now, can you tell me something? Now, I'm giving a small gap in the provision, and I want to discuss a small example. If this is my P&L account, I am all R limited. My sales are 80 lakhs. I donated to Delhi University. Donation to Delhi University for scientific research. 1 crore. Or you can say 90 lakh. Can you tell me what is the net result? Can you tell me what is the net result of my P&L account?
Sir, net loss of 10 lakh.
Net loss of 10 lakh. Please raise your hand. Is everyone, if everyone is agreeing on this point? Please raise your hand that yes, net loss is 10 lakh. Okay, next point. Very good. Next point. I am preparing my P&L account. Again, I am R limited. Sales 80 lakh. Donation to, not donation, capital expense on scientific research incurred by me. Incurred by me 90 lakh. Can you tell me the net result? What is the net result?
Sir, net loss 10 lakh.
No. Here the net loss will be nil. Rather than 90, I can maximum write 80. And do you know what 10 lakh would be known as? Unabsorbed depreciation. How much? 10 lakh. I told you in the last class that depreciation, if not fully adjusted, will not lose its own identity. It will continue in the next year with its own name, unabsorbed depreciation. Same is the case with this expenditure. I told you that there are 6 expenditures which will not lose their own identity. I told you these 6 expenditures. One is depreciation itself. Another is capital expenditure on scientific research. If capital expenditure on scientific research, this one. If capital expenditure on scientific research does not or cannot be fully adjusted, it will not lose its own identity. It will not merge with business laws. It will be known in future with another name, unabsorbed depreciation. That's it. Please raise your hand if it is understood. Next point. Please raise your hand if this point is clear. Next point. Last expenditure of capital nature, contribution to national laboratories or IITs. E point. Contribution to national laboratory or IIT. Here also, whatever you donate, 100% is allowed as deduction. That's it. Fifth expenditure. Specified business, deduction. Now scientific research is over. Next one, deduction in respect of expenditure on specified business. Section 35 AD. Section 35 AD. So the scientific research is over. Now next, section 35 AD. There are some businesses which can be called as specified businesses. There are some businesses like cold chain facilities, warehousing. So in section 35 AD, some special types of businesses are covered. Cold chain facilities, warehousing, and fertilizer production, building and operating hospitals, having minimum 100 beds with a minimum of 100 beds, etc., etc. Around 13 to 14 such businesses are there. There are around 13 to 14 such businesses which can be called, if you want, they can be called, if as an assessor you want, they can be called as specified business. Of course, these businesses comes with different conditions. These business comes with some conditions. So section 35 AD is an optional section. It is optional. It is not compulsory. It is optional section. If as an assessor you want to apply this section 35 AD, then you have to fulfill the conditions of section 35 AD. It is optional section. It has its own rules and regulation, own benefit or negatives, own positives, own negatives. If I am into this fertilizer production, it is my choice. I can say that I want to apply 35 AD or not. So it is my choice. So you must remember that 35 AD is not compulsory section. I want to apply section 35 AD. If I want to apply 35 AD, then I have to meet the conditions of 35 AD, and I will go by the benefits which are there and negatives which are there in 35 AD. If I say I don't want to apply section 35 AD, government says no issue. You have normal provisions also of PGBP. So to compute the business income, you can compute it as per normal provision or as per the provisions of 35 AD. It's my choice. So as I told you, in all these 13 to 14 businesses which are covered in section 35 AD, it is my choice. I can compute my business income as per normal provision or as per the provisions of section 35 AD. So that is why in income tax act you will always find it separately written. Income of specified business 35 AD. That means this covers that business which has shown interest in computing the business income, not as per normal provision, but as per the provisions of section 35 AD. It is not in our course in detail, but at some level, in one or two lines, I can get a question that this is the loss of a specified business 35 AD or income of a specified business 35 AD. So for that purpose only, you must be having the knowledge of 35 AD. How to compute the income of 35 AD, that is not in our course. What different types of businesses are there, that is not in our course. But you must know that 35 AD is a special section of computing business income for some limited types of businesses which fulfill the conditions which are mentioned in this section 35 AD. It is optional section for such businesses. They can compute the business income as per normal provision or as per the provisions of section 35 AD. Section 35 AD discusses that which businesses are there, what deductions will be allowed to compute the business income, etc., etc. So we are not going into the detail of what type of deductions, etc., is allowed. But one thing is clear now, that the businesses which are covered under section 35 AD, I call these as specified business. That's it. That's it. This is what you need to learn. So I'm proceeding now to the next point. So what you need to learn for this 35 AD is what maximum you can get at your level. That somewhere in the question I can get this point, income of a specified business. If the word specified business is written, the examiner might also tell you that it is 35 AD business. They might give me that directly income is 10 lakh, or they can give me what? Loss in a specified business. That's it. This is what maximum which can be asked for our level. 80 lakh, for example. So what they will give you some figure and they will simply tell you directly that this is the income of a specified business or this is the loss in a specified business. That much only you need to know for your semester 3 level. Is the point clear? If yes, please raise your hands. Is this point clear? Please raise your hand. Okay, now just one more point which you need to remember. This deduction of 35 AD is not allowed when the assessee has opted for optional taxation scheme. 35 AD deduction is not available when the assessee has opted for optional taxation scheme of section 115 BAC. If you have opted to pay tax as per optional taxation scheme, then you cannot claim the deduction of section 35 AD. This is one thing which you must note somewhere, so that if you get a small numerical or so not numerical theory of section 35 AD in 5 marks maximum, then you can mention this point also, that deduction of section 35 AD is not allowed if the assessee has opted for optional taxation scheme. Similarly, I forgot to tell you this optional taxation scheme in scientific research also. Please note it down. In this case also, when you donate towards notified university, if you have opted for 115 BAC optional taxation scheme, you cannot claim this deduction. In C point also, if you have opted to pay tax under optional taxation scheme, you cannot claim this deduction. And in point number national laboratory E also, if you have opted to pay tax under optional taxation scheme of 115 BAC, you cannot claim this deduction. So till today, what are points we have discussed? What are those expenses which are not allowed as deduction when I opt to pay tax under optional taxation scheme? Additional depreciation is not allowed if I opt to pay tax under optional taxation scheme. Contribution to notified university / institution for scientific research not allowed. Contribution to a company which is engaged in scientific research not allowed. Contribution to national laboratory not allowed. Deduction for section 35 AD not allowed when I opt to pay tax under optional taxation scheme. If I opt to pay tax under optional taxation scheme, revenue expenditure will still be allowed, no problem. Capital expenditure will still be allowed, no problem. That's it. 35 AD is also over. And what expenses section we have covered? 30, 31, 32, 35 and 35 AD. We have covered till now only 5 sections which are allowed as deduction. In these 5 sections, one new point is that in these 5, what expenses are not allowed if the assessee opts to pay tax under optional taxation scheme? What are those? Additional depreciation not allowed. Normal depreciation you can still claim. Additional depreciation not allowed. Contribution to notified institutions, universities for scientific research not allowed. Contribution to a company which is engaged in scientific research not allowed. Contribution to national laboratory not allowed. Deduction in respect of the expenditure for specified businesses under 35 AD not allowed. If this discussion is clear, please raise your hand. Sixth type of expenditure, preliminary expenditures, section 35D. This is my 6th expenditure. I hope the screen is still visible. 6th expenditure, preliminary expense. amortization of preliminary expenditure. Can you tell me what are these preliminary expense?
So expenses that are incurred before the business commences.
Yes, expenditure which is incurred before the business commences. Any other answer? Under Income Tax Act, it can be the expense which is incurred even after commencement. So of course, before commencement, of course, it is preliminary. So till the business is commenced, you cannot prepare P&L account, and that is why till the business commences, you cannot prepare P&L account, and that is why the moment you prepare P&L account, you need to account for these preliminary expenditures. But even after commencement, expenditure for the purpose of Income Tax Act can still be called as preliminary expenditure, even after commencement. But in case of after commencement, it should be for expansion of the business. Any expenditure which is for expansion of the business can be called as preliminary expenditure. Expansion of unit, etc. So it is having some technical words, but for your level, this much is sufficient. That for income tax purposes, not only before commencement expenses, in some cases, even after commencement expenditures, I can call that as preliminary expenditure. This is also allowed as deduction. So how much is allowed? There is a limit. How much is the amount of deduction? Expenditure, actual expenditure, actual preliminary expenditure, or maximum 5% of the cost of project. Suppose my cost of project is 100 crore, and if company says that 80 crore is our preliminary expenditure, then it is a little bit illogical. When your entire project was of 100 crore, you spent 80 crore just on the base on preliminary expenditures. Normally, if the cost is 100 crore, normally 5% or 5 crore, I can assume it as preliminary expenditure. If you spent 80 crore on preliminary expenditure having total cost of 100 crore, then what type of businessman you are? So that is why a rational or logical expectation is that maximum 5% of cost of project can be preliminary, not beyond that. If it is, then Income Tax Act says maximum 5% of the cost of project in our view is rational. Whichever is lower is allowed as deduction. Whichever is lower is allowed as deduction, no problem. Is allowed as deduction. In 5 equal annual installments. First installment starts from the year in which the business is commenced. That's it. In case of revenue expenditure incurred by the assessee himself for scientific research, in case of capital expenses incurred by the assessee himself for scientific research, deduction is allowed even for prior 3 years expenses, but in the same year in which business is commenced. In preliminary, it is allowed, but not in the same year in which business is commenced. It is allowed in 5 equal annual installments. First installment starts from the year in which business is commenced, and then next 4 years. What can be preliminary expenditure? Now this is the question. What do you mean by preliminary? So you must know that what type of expenses can be preliminary. What expense I can call as preliminary? Preparation of feasibility report. So let me note down those which are written in the act. Preparation of feasibility report. Preparation of project report. So selected I'm writing for you. And conducting market survey. These are some of the examples which are given in the Income Tax Act itself. Conducting market survey related to the business, because before you start the business you want to check whether there will be audience for your business or not. Conducting market survey necessary for the business. And last you can write is engineering services related to business. And last one is drafting. Documents we will draft. So drafting charges for any document. You will do some contract, etc. for any document related to the business. For any document related to the business. That's it. These 5 you can learn. And this 35 AD is allowed to a resident assessee. Resident. In this case, if a non-resident person is a businessman, that person cannot claim section 35 AD. For this, a resident assessee must be necessary. That's it. This is what section 35D. Please raise your hand if there is any doubt. I hope the point is clear. And with this, we cover our first category of expenses which are allowed as deduction, which are having its own theory condition, own calculation. Now I am moving to section 36. The expenses which are also allowed as deduction and having their own identity, but not much calculation work is involved. In 30, you can see, you have seen that in 32, depreciation calculation requires some work. Scientific research requires some calculation work. Preliminary expenditure requires some calculation work. But 36, now I will tell you those names where much calculation or not much calculation is required. It will be simple. You need to learn the expenses name. So let us start with section 36. Section 36 expenditures. Which are also allowed as deduction. While computing PGBP income. Again, let me show you the act. So let us come to the Income Tax Act. Let us move to section 36. See, there are so many sections which are not in our course or which are not relevant. So I have skipped those sections. As you can see, there are so many sections. After 32, I skipped 32A, 32AB, AC, AD, 33, 30. These are not relevant. And most of these are now not applicable also in assessment year 21, 22. I moved directly to 35. After 35, I moved directly to like these sections 35A, AB, etc. These have become redundant now. When you start reading it, you will find that these are not applicable now. Moved to 35 AD, then I moved to 35 D, and now I'm moving to 6. As you can see, the heading other deductions. Let us see this heading other deductions. What is 36 subsection 1? The deductions provided for in the following clauses shall be allowed in respect of the matters dealt with therein in computing the income referred to in section 28. So section 28 refers business income. So what expenses are allowed? So there are so many clauses written 1, 1A, 1B, 2, 2A, 3. Also expenses which are given by name. As you can see, in case of every, it is given by name. Like bad debt. Every clause you will find the word of that expense which is allowed as deduction. It's also a lengthy section. Banking cash transaction tax. You can see these words. Securities transaction tax. Commodities transaction tax. I will simplify these for you. Like it was insurance against risk of damage, bonus or commission to employees, etc., etc. So I wanted to show you this. Now let me start simplifying these clauses. So I will tell you the names which you must learn carefully. So I'm discussing now section 36, and here the work of calculation is not much. You need to learn the name of the expenses. Calculation work is not much. I hope the screen is visible, and please start writing these expenses which are also allowed as deduction while computing PGBP income. So we have now moved to my second category of expense. So what are the expenses which you must learn by name? So please write these points. Insurance premium paid to secure stock. Paid to secure stock. So what are insurance premiums? So there is no calculation required. Whatever you pay, that is allowed as deduction. Can you tell me what section? Insurance was also covered in section 30 and 31 also. Can you tell me what was covered in section 30?
Sir, rent rate insurance of a building, land and building.
So that was covering insurance on building in which I am doing business. What type of insurance was covered in section 31?
Plant and equipment.
Plants and machineries. And here the insurance covered is closing stock of raw material or of finished goods. So all these are different. 30 covers insurance which is for different purpose. Section 31 covers insurance which is for different purpose, and section 36 covers insurance which is for different purpose. A company might pay medical insurance premium which the company has taken for the health of the employees. So that is also allowed as deduction in the hands of the company. If I use the word company, it does not mean that I want to say only for the company. The main intention of my mind behind using the word company is that businessman. So whosoever is preparing P&L account, whether individual, firm, association, HUF, company, whatever. So if by mistake I speak the word company, don't treat it as the case when the expenditure is allowed as deduction only for a company SSE. The purpose of behind using the word company is that you must be having one picture clear in your mind that assessee is a businessman. That can be individual or non-individual person. So medical insurance premium paid to secure the health of employees. So suppose if Mr. X is a businessman. For example, in Delhi, Mr. X has a cloth shop where 20 employees are working. So to secure their health, Mr. X was kind enough to take medical insurance policies for the employees. Employees have not asked Mr. X to take the policy, but employer himself is interested in taking medical policy and he paid 2 lakh premium. Government says 2 lakh is allowed as deduction under section 36. Medical expenditure for employees allowed. Now you can see the intention of the act also. Such things motivate businessmen to give something indirectly for the benefit of the employees. If they don't get this as deduction, they might not have taken the medical insurance policies for the employees, but they know that it is allowed to them as deduction. So this expenditure can be shown on the debit side. Bonus or commission paid to employees. Next one, I'm telling you only the relevant one. Interest on capital borrowed for the purpose of business or profession. Every businessman needs some money to run the business. So if that person has borrowed something, whatever interest that person is paying for that capital which is used for business and profession, that interest is allowed. There is no issue. Business or profession. Next point. Employer's contribution towards RPF of the employees. Recognized provident fund of employees. You must have seen it in salary also, but these two chapters are different. In salary, the taxable calculation was going on, and here the employee was individual who is receiving something. Now this employee, sorry, not this employee, now this assessee is a businessman. Like whatever salary he was giving to the employees, he was showing on the debit side, and the same salary this employee was showing as income. That's it. So similarly, maybe the employer has contributed 2 lakh rupees in employees RPF. Employee has contributed 2 lakh rupees in employees RPF. It is allowed as deduction to the businessman. But when the same employee will include this RPF, can you tell me how much he will include? He will not include complete 2 lakh. He will deduct how much? 12% of salary. And he will include only the difference. So these two chapters are going on separately. Salary is having different perspective. PGBP is having different perspective. Income Tax Act says as a businessman, whatever you are donating, sorry, I should not use the word donating, whatever you are contributing towards your own employees RPF, you can show the entire expenditure on the debit side of your P&L account. Of course, it is having some limits. How much maximum? So that is not in our course. That is by default, whatever is there, we will assume that that is within the limits of recognized provident fund. So those limits are beyond the scope of semester 3. But theoretically it is that as an employer, whatever you are donating, whatever you are contributing towards employees RPF, if it is within the limits, those limits you are not supposed to learn. You have to assume that these are within the limits. You can show the entire amount on the debit side, but entire amount will not be taxable in the hands of the employee. There is a benefit to the employee. Only over and about 12% of salary is taxable. Remaining will be difference till 12% of salary will be tax free. Please raise your hand if the concept is clear. It's just to remove confusion from your mind that salary is different, PGBP is different. PGBP is from employer's point of view, salary is from employee's point of view. Please raise your hand if this point is clear. RPF treatment. Next point. Similarly, on the same lines, next point. Employer's contribution towards approved superannuation fund of the employees. Approved superannuation fund of the employees. So whatever employer contributes towards employees superannuation fund, 100% allowed as deduction. Again, if I'm a businessman, whatever I'm contributing in my employees approved SAF superannuation fund, I can show that as debit on the debit side. Same amount in the salary, employee will include as a salary. Employer's contribution or income from approved superannuation fund. Again, that is also taxable but subject to some limits. Minus whatever is exempt, you will exempt, and remaining you will tax it. Here also there are some limits. Maximum I can contribute towards this fund. Theoretically, I will assume that whatever employer is contributing is within the limits of approved superannuation fund. That's it. So for your level, it is simple. Whatever employer contributes, you will assume that it is within the limits of superannuation fund. So you will show entire amount on the debit side. As far as salary is concerned, and the same amount will go to the employee. Then you have to remember the rules of salary, that how much is exempt and how much is taxable. Seventh point. Employer's contribution towards new pension scheme of the employees. See why these deductions are allowed. If department does not allow these deductions, employers will not contribute towards these funds. They will say that we will give you entire amount of salary. We will not give you anything towards your fund because we will not get the benefit. So to do tax planning, it is necessary that we need to carefully see, or we need to carefully provide. We means Government of India. Government of India must carefully provide some benefits to the employers also. Otherwise, they will not give that component to the employee. They will only give that component of salary to the employees, which they can show on the debit side of P&L account. Why will they give that component to the employee, which they cannot show on the debit side of P&L account? So that is why these benefits are necessary to be provided to the businessman. Employer's contribution towards new pension scheme of the employees is allowed as deduction, but here the limit is maximum 10% of salary of the employee. In about two cases, I was saying that the limit you have to theoretically assume that is fulfilled. The limit, it is within the limit, but now you have to manually check whether whatever employer is contributing towards NPS of the employee, is it within 10% of my salary as an employee or more than 10%. Like, suppose employer is a employer is a businessman. In NPS of Naveen, I am the employee. They have given 2 lakh rupees. Suppose they have given 2 lakh rupees. When this person Naveen will compute the salary, he will write employer's contribution in NPS 2 lakh. How much is exempt? Nothing is exempt, but in future there will be deduction. Can you tell me under which section I will get the deduction? 80? Do you remember 80? CCD subsection 2. Employer's contribution towards NPS is allowed as deduction under section 80 CCD2. Of course, it has some limits. Now, employer has given me 2 lakh. Can employer show 2 lakh? Answer is it depends on what? Employee's salary. If Naveen's salary is 18 lakh, and what do I mean by salary? Basic. I think you have forgotten these concepts. If you remember the salary of, for NPS purpose, this is the salary, basic plus DA forming part plus commission based on fixed percentage. If this total is 18 lakh, then maximum employer can debit is how much? Till 10%. That means though employer has given me 2 lakh rupees, but on the debit side, he can show maximum 1,80,000 rupees. This is what the point which you need to remember. Though employer has given me 2 lakh rupees, but maximum that employer can debit is 1,80,000, because in PGBP, employer's contribution towards NPS of the employees is allowed as deduction, but up to 10% of salary. Please raise your hand if the concept is clear. You must remember that PGBP and salary are two different chapters. The rules which are applicable in salary cannot be applied in PGBP. PGBP goes separately, salary goes separately. PGBP is from the employer's point of view, salary is from the employee's point of view. That's it. Please raise your hand if the concept is a little bit clear. All these conceptual things will be applied in full-fledged questions when we will start preparing P&L account. Then you will start checking the provisions, which benefits or which things can be shown on the debit side and which cannot be shown. Please raise your hands, those who are understanding the concept of PGBP. What we are doing is nothing but only learning those expenses which can be shown on the debit side. That's it. The moment we learn these things, we will simply apply this knowledge in solving the full-fledged question.
Sir, can you go to the previous slide?
Yeah. Yes.
Can you go to the previous slide once?
Yeah.
Okay, sir. Thank you.
These 7 expenses for the time being we have learned: insurance to secure stock, medical to secure health, bonus to employees, interest on capital borrowed for the purpose of business, employer's contribution towards RPF of employees, employer's contribution towards approved superannuation fund of employees, employer's contribution towards NPS of employees till 10% of salary of the employees. 8th expenditure. You have to learn these expenditure. There is no option but to learn this. You have to learn it. Now in all these expenses of section 36, not much calculation work is involved. It is 8th expenditure, employer's contribution. Because why I'm using the word employer's contribution? Because we are doing PGBP from employer's point of view. We need to check what expenses employer can show on the debit side. Employer's contribution towards approved gratuity fund of the employee. Allowed as deduction. Like this employer, if contributing in approved gratuity fund 3 lakh rupees of the employee, it is allowed. Act says no issue. Businessman can debit this expenditure on the debit side. There is no problem. How it will be taxed in the hands of the employee? For this, I will read the chapter salary. PGBP doesn't talk about this. How the taxability in employee's hand will be done. For this act says go to salary and read the provisions. This act talks about, or this chapter talks about, the way to compute the income by the employer. All these are common expenses. That is why these are written with the name in the act. These are common expenses. These are prominent expenses. These are necessary expenses. These we will find almost in every case of most of the employers. That is why these are written with the name. Next is little bit technical. Ninth. So I will write complete line. Any sum received by the employer. It is little bit technical but very interesting. Any sum received by the employer from his employees. Now technically, if you see what is happening, employer is receiving something. In all other discussion, in the entire discussion which we have done today, employer was giving something. Now employer is receiving something from the employees. Any sum received by the employer from his employees, think logically, as what? Contributions to any provident fund. It's a little bit technical, but again, the moment you understand any technical thing, you feel very happy that you learned something which is not understood by many people. Superannuation fund. Or any fund for the welfare of the employees. Or any fund for the, I will write here subsection also, clause also, welfare of employees. Section 36, 1 clause 5A. See the language carefully. Any sum received by the employer. Received by the employer, that is very interesting. In all other expenses, employer incurs or pays something. Now he is receiving something. It's very strange. Any sum received by the employer from his employees as contributions to any provident fund, oblique superannuation fund, oblique for any fund for the welfare of employees, that is allowed as deduction. If you see carefully what is going on, or what was going on till this 9th point. What was going on till this 9th point? This was employee and this was employer. He was giving something to the employees. And that is why when he was preparing P&L account, he was showing those expenses. Now what is happening in 9th point? Now what is happening in this 9th point? This employee is giving something to the employee is giving something to the employer, and still employer is getting the deduction. Please raise your hand if the point is clear. Have you understood what is happening? Earlier cases were fine. As an employer, I was giving something to the employee and I was getting the benefit on the debit side of P&L account. Now I am receiving something from the employees, still I am getting the benefit. Please raise your hand if the issue is clear. Have you understood this point, that yes, 9th point is a little bit different from earlier discussion. Whatever we have studied till 9th point, as an employer, I was incurring some expenditure. 9th point, I am receiving something and still I am getting some benefit. If it is written in section 36, it means what? I will show this as on the debit side of P&L account. Please raise your hand if the issue is clear. Or have you understood that what is different in point number 9 as compared to other points which we have discussed today? Please raise your hand if the problem is clear, or if differential treatment is clear. Have you please raise your hand if you have understood that yes, 9th point is a little bit different. Except 9th point, what was happening? As an employer, I was giving something. I was incurring the expenditure. So I was getting the deduction. In 9th point, I am receiving something and still I am going to get deduction. Why this is so? For this, the reason is that any such amount which is received is first treated as income of the employer. Any such amount which is received. So I'm moving to the next page just for explaining you. In my 9th point, any such amount which is received by the employer is first treated as income of the employer. Income of the employer is first treated as income of the employer. Under section 2, clause 24, subclause 10. That is first treated as income. Any such amount which employer receives from the employees in what capacity? As the employee, and this amount is what? Employees' contribution to provident fund or any fund for the welfare of employees. First, it will be treated as income of the employer. After this, when employer will first add this as income, then he will deduct this as expenditure under section 36, subsection 1, clause 5A. Suppose employee has given 10,000 rupees. Employee says that to the employer, please deposit my 10,000 contribution towards a provident fund. Employee says that please deposit my 10,000 in my provident fund account. Please deposit my 10,000 in my provident fund account. So employer will receive it and employer will pass on this 10,000 to the provident fund authority. Employer has nothing to do with 10,000. It is unnecessary, a problem for the employer. His job is what? Just to receive something from the employee and just transfer as it is to the provident fund authority. Employer simply acts as a mediator in this case, because such things promote or provide safety to the employees. In one company there may be 1,000 employees, so by default this becomes a compulsion that every employee has to contribute this much amount in his provident fund, and it will be deposited through employer. So employer comes in between or is acting as a mediator only, intermediary only. Employer is simply receiving 10,000 from the employee and transferring in the employee's account itself, which is with the provident fund authority. So when he receives this thing, it becomes income of the employee. Employer will show 10,000 rupees as income under section 2, clause 24, subclause 10. And when he transfers this amount to the PF authority within due date of depositing this amount with the authority, within due date of depositing the amount of employees with the designated authority, provident fund authority. It is not the due date of filing return. Don't confuse it. It is not the due date of filing return of the employer. No. It is the due date by which employer is under obligation to pass this amount with the authority. Then the moment it is passed, it is claimed as deduction. So the effect in the hands of employer is nil. This 10,000 was not the employer's money. So technically, it is treated as employer's money when you received it, but don't keep it with you. If you delay as an employer, if you don't deposit this amount on time, then unnecessarily you will have to pay tax on 10,000. because you will not get any deduction, and by default it will become your income. So unnecessary, no employer is happy with this job, but government wants security to the employees. And if employees are left free to open their PF account, most of the employees would not find time to open the PF account, or they would not deposit the amount monthly regularly. That is why made the compulsion on the employees that this much percentage of salary you must give it to the employer. You must. An employer is also under compulsion to pass the same amount with the authority within the due date. How the government deals with this? The moment employer receives this amount from the employee, employer has to show it as income under section 2 clause 24 subclause 10. The moment employer deposit this amount with the authority, the same amount will be written by the employer as deduction under section 36 subsection 1 clause 5a. Please raise your hand if the concept is clear. It is little bit technical. Is the point a little bit clear? When any employer receives something from the employees, where employees say that please deposit this in my provident fund account, employer will include this as its income, and the moment employer deposit it with the designated authority with whom the employees is having the provident fund account, the same amount will be written as deduction or as an expenditure under section 36 subsection 1 clause 5a. That's it. Next point of section 36, it will look little bit difficult till we start discussing the numericals of PGBP. But we cannot discuss the numericals of PGBP unless we discuss the theoretical concept that what expenditure is allowed as deduction and what not. Next point. So let us make a quick revision of the points which we have covered today. Let us start from beginning. Section 28, type of income, which is business income. Section 29 tells you the computation. Section 30, expenditure of insurance, rent of building. Section 31, insurance on plant and machinery. 32, depreciation. 35, scientific research. 35AD, specified business. 35D, preliminary expenditure. And then section 36 started. Within 36, insurance to secure stock, medical on the health of employee, bonus commission to the employees, interest on capital borrowed for the purpose of business or profession, employers. Now these are technical. 5, 6, 7. Employers' contribution towards RPF of employees, employers' contribution towards approved superannuation fund of employees, employers' contribution towards NPS of the employees, maximum till 10% of salary of the employees. These are technical. 8, 9th also. Employers' contribution towards approved gratuity fund of the employees, and last 9th was any sum received by the employer from his employees as employees' contribution in any fund which is for the welfare of employees is first treated as income and then it is allowed as deduction. 10th point of section 36, bad debts. Bad debts are also allowed as deduction. Bad debts are also allowed as deduction, but it is having some small calculation work. So you note down this line which I will write. If amount ultimately recovered is less than difference between the difference between the debt and amount so deducted. comma. Then what will happen? The deficiency. So I need to take the help of numerical. Deficiency will be allowed as deduction. As bad debt in the year in which ultimate recovery is done. You will not understand it till I discuss with you a numerical. So let me share with you an example from my book, and you please take this screenshot. Please take this screenshot of this page. Let me show that page. Now this illustration, please take the screenshot of this illustration. And when you have taken the illustration, then you please raise your hands. Or if you have this numerical video, please raise your hands. We will discuss this numerical, and with this numerical we will understand the concept of bad debts. Just because bad debt is written, I will not allow the deduction. I will show you the calculation involved in bad debt. Please raise your hands when you have taken this screenshot. Please raise it, then I will move forward. So please keep your hands raised if you have taken this screenshot. Okay, so I think I should move forward. Now let us read this. During the previous year, 17-18, it is not my previous year. It is around 3 years before situation. During the previous year, 17-18, X has sold some goods for rupees 2,50,000 to Y. So as X, Y is my debtor. And if you think in terms of Y will show X as creditor because Y has to pay the amount and X has to receive. So for X, Y is my debtor, asset. So I am X, I will receive 2,50,000. I want to receive, of course, 2,50,000 from Y, and shows 2,50,000 as sales while computing the business income of the previous year 17-18. Of course, if I had done the sale, I have shown 2,50,000 as my sales in the previous year 17-18, and for the same amount I will write in my balance sheet as debtor. Y paid 50,000 through cash. On the spot, Y paid 50,000, and remaining 2 lakh he agreed to pay in 20 months. So that means I have 2 lakh debtors, not 2,50,000. I have the debtor of 2 lakh rupees. Thus X has a debt of 2 lakh rupees because Y is a debtor for X. Of course, Y also paid 80,000 on 16th December 19. In 19-20, last year he paid 80,000 also. For the previous year 19-20, X had written off 30,000 as bad debt against the outstanding from Y, and thus deduction of 30,000 is allowed to X while computing the business income in the previous year 1920. In 1718, I made a sales of 2,50,000. In 1718 itself, I received 50 and my debtor in 1718 was 2 lakh. In 1920, my debtor of 2 lakh paid 80,000. So the remaining debtor in 1920 was 1,20,000. In 1920, I found that I will never receive 30,000. So I got the deduction in 1920, no problem. But still in 1920, it was not final that I will never receive the remaining amount. But in 2021, during the previous year 2021, X recovered full and final payment from Y. Now it is final. A, if I receive 70,000 and no more amount. B, if I receive 90,000, no more amount. And C, if I receive 1,05,000, no more amount. How will you tax the amount? Let us start solving the numerical. I hope the question is clear now. Let me simplify this with the help of my presentation. So let us solve a question from my book. So this is a small illustration from my book Concept Building Approach, page number 6.19. Small illustration. How do we tax the amount of bad debt? Very simple. What is the difference between debt and amount so deducted? Now, before this, what situation was there? In 1718, P&L account, I showed sales 2,50,000. In 1718 itself, in my balance sheet, I showed debtor 2 lakh, cash 50. I hope the point is clear. In 1819, what happened? Nothing. So in 1819 P&L account, nothing related to this transaction. Nothing related to this debtor happened. In 1920 P&L account, what happened related to this debtor of 2 lakh? So in 1920 balance sheet, what happened? That my debtor, rather than 2 lakh, have become how much? Can you tell me how much? 1,20,000, because I received 80,000 cash. So debtor balance has remained only 120. And coincidentally, in 1920 also, I found that he is not going to pay me 30,000. So I showed 30,000 on the debit side. Is this structure clear, which has been happening in this example? If yes, please raise your hands.
So when there is bad debt of 30,000, why debtor is 1,20,000?
Yes, it will be 90. Yeah, correct point. It will be 90. When there will be a debtor of 30, of course, debtor will not be 120. I don't have much space, so I will cut it. Rather than 120, it will be, of course, 90. Yes, correct point. Please raise your hand if the structure which I have prepared is clear as far as accounting treatment is concerned. So please raise your hand if you have understood that what has been going on here. Now, what Income Tax Act says? It has its own way. If you read the notes carefully, it says that if ultimately recovered, ultimately means when you come to know that you will never recover more than this, so only then you start doing the treatment. Now I have three situations. In the previous year 2021, don't note down anything, just listen. How much is my final recovery? Final. Suppose 70, what will be the treatment? Suppose 90, what will be the treatment? And suppose 1,05,000, what will be the treatment? So this is my left side, first column. Difference between debt and amount deducted. So technically this difference is nothing. If you see carefully, this difference tells you the maximum bad debt. That how much maximum bad debt you can be having. Can you tell me how much maximum bad debt I can be having? Think logically, how much maximum bad debt you can be having in my example?
20,000.
How much? Anyone who can tell me the answer, how much maximum, ignore the formula, just simply tell me logically how much maximum bad debt you can be having.
Sir, 90,000.
How much?
Sir, 90,000.
How 90?
Sir, because debtor amount is 90,000.
Yes, this is the maximum bad debt which I can be having. So how I have computed, how much is debt? How much is debt? Before deducting any bad debt earlier in any year. Before deducting any bad debt earlier in any year, how much is the debt? 2,50,000 were the original debt. In fact, not the original debt, because 50 I paid on the spot. So 2,00,000 were the original debtor. If I say debt, it is not my loan, it is my debtor technically. Out of 2,00,000, 80 I paid next year. So the maximum was how much? How much was the maximum debtor in my year? How much is the maximum debtor in my year? 2,00,000 original. And previous year I also received. It is how much is maximum debtor? 1,20,000. Out of 120, how much amount of bad debt you have already deducted in all the earlier years? I have deducted only 30,000 earlier. So maximum loss now from the point of view of tax department can be only 90,000 with you. Please raise your hand if you have understood this point. In the eyes of the tax department, maximum incurring loss can be only 90,000. Because I showed 2,50,000 as sales. So out of 2,50,000 sale, maximum bad debt can be 2,50,000. But out of 250, you received 50 already. You received 80 already. So how much maximum debtor you have now? 1,20,000. Out of 120, you received 30,000 as bad debt benefit from us. If I am talking about income tax act, department says 30,000 out of 120 you have already debited. So how much maximum loss now you can be having? How much maximum loss now you can be having? Only 90,000. And how much you are recovering? 70. So what is the maximum loss now you are having? 20,000. It will be allowed as deduction. As deduction on account of bad debt will be allowed in the previous year, in which you are recovering the final amount, 2021. Bad debt is allowed in the previous year, 21. And this is logical also. Of course, maximum bad debt remains same. Whatever you recover, your bad debt is maximum 20. Ultimately, department says that you have shown on the credit side 2,50,000. Maximum you can show on the debit side 2,50,000. But out of 250, 50 you got as cash, 80 you got. So maximum now technically on the credit side is 120 remain. Out of 120 you debited 30,000. So technically on the credit side only 90 remains. And out of 90 you received finally 70. So maximum 20 is bad debt, which we will allow. If you receive 90, no treatment. no loss, no profit. And if you receive 1,05,000, technically 15,000 extra you have received than what we have shown on the credit side of P&L account. So 50 is taxable as PGBP income. And this section, you will read it later on. It is section 41 clause 4, subsection 4. It is 41.4. That's it. Now, if you see carefully, everything is going on logically in this provision bad debt. Please raise your hand if the point is clear. Next point. Still section 36 is going on. Next point. 11th point. Expenditure incurred by a company. Now I am using the word company. Now I am deliberately using the word company. So it is allowed only to a company assessor, not to an individual businessman, HUF businessman, firm businessman. Now if a company is preparing P&L account, only a company can claim it. Expenditure incurred by a company. So here I don't mean to include every businessman, only company for promoting family planning amongst its employees. For promoting this deduction. If a company, specifically company only, not individual businessman, not HUF, firm, etc., only company can claim this deduction. Now, keeping in mind the population of our country, of course, it is more because more population will make sure that resources are overexploited. So that is why Income Tax Act also gives a provision where the social purpose can be fulfilled, because if the employees follow this family planning, it will help ease the burden on the existing resources available on this planet Earth. Because very soon, if you see the reports, India will overtake China also as the largest populated nation of this planet. So this is also a provision related to that family planning. So different awareness programs might be companies incurring. So whatever expenditure company is incurring to promote family planning amongst the employees, Income Tax Act says we will treat it as your business expenditure. So they will ask a question, is this a revenue expenditure or this is a capital nature expenditure? If it is revenue expenditure, 100% is allowed as deduction. 100% is allowed as deduction. If it is capital expenditure, then it is also 100% allowed. Then it is also 100% allowed, but in 5 equal annual installments. Not in the same year. Allowed as deduction in 5 equal annual installments. And first installment starts from the year in which expenditure is incurred and next 4 years. And first installment starts from the year in which expenditure is incurred and next 4 years. That's it. So to promote family planning, if a company assessor is incurring some expenditure, if it is of revenue nature, 100% is allowed. Capital, 100% is also allowed, but in 5 equal annual installment, and first installment starts from the year in which the expenditure is actually incurred and next 4 years. Now, can you tell me something? I am X Limited. My sales 60 lakh. I incurred 80 lakh revenue expenditure on family planning. Family planning, for promoting family planning amongst the employees, I incurred 80 lakh. Can you tell me what is the net result of this P&L account? Hurry up.
Sir, net loss 20 lakh.
Net loss?
20 lakh.
Yes. IMX Limited. P&L account. Sales 60 lakh. I incurred 5 crore. I incurred 5 crore as capital expenditure on family planning. Can you tell me how much maximum I can show on the debit side of P&L account?
60 lakh.
1 crore. Capital expenditure on family planning. First of all, this is one thing that at initial stage I will show 1 crore. But can you tell me what is the net result? Why 1
Sir,
crore?
nil.
Because I have to make 5 installment. Okay. So this is first thing. The remaining 1 crore will show in the next 4 years. Now, what is the net result?
Sir, nil.
Nil. Why?
Because of unabsorbed depreciation.
Yes. So this is also that third expenditure. This is also that third expenditure which will not lose its identity. It will be called in future with a new name, unabsorbed depreciation 40 lakh rupees. With this, I have covered all those 3 expenses which have their own identity. They will not be merged, or they will not go into, they will not be known in future as business losses. They will remain, they will keep their own identity. Depreciation if not fully adjusted, capital expenditure on scientific research if not fully adjusted, and capital expenditure incurred by a company if not fully adjusted. These will be called in future with the name unabsorbed depreciation. Please raise your hand if the concept is clear. Just a second. I hope the point is clear. Okay, please wait a second. I want to show you one thing.
So can you switch to the previous slide for a second?
Okay, wait. Is it?
Yes, sir. Done, sir.
Show you something if I can find that. I want to show you something, so let me see if I can see that. Now see this, I will show you one. There are so many things which graphs can show you. They cannot be shown through language only. So let me show you one thing. I will show you this, how the population is, how rapidly the population of this planet is growing. Then you might understand the complex situation which will arise maybe after 100 years or 50 years. It has already started arising. Can you see the net now? Is it visible? Is it visible?
Yes.
Yes, sir.
See this. You might not understand it, but you can see this growth, world population, how rapidly the babies are born. You can see the speed with which the population of this world is rising. So death is slow. Now you can see 922. It's much more than a second. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So how rapidly, this is how we are growing, and of course it will be having huge impact on the existing resources available. That is slow. So while we are having a lecture of 2 hours, more than 150 human births must have taken place. If you see India, China's, you can see how India will take over China. Why? Because of this. Now this is China's growth. You can see it is little bit slow. 45, 43. Then we are waiting. 4, 5. So around 3-second gap. But you see now India, and then you will realize India's growth. So that is why India will overtake China. India's gap is not much. 3, 4, 5, 6, 7, 8, 9. So it will give you an idea that, yeah, of course, we will overtake China very soon. So this chart clears the picture more. Charts or graphs, these are having more retention capacity in our mind than only the language. So in this website, Wordometer, you can check through this growth. Now you see how rapidly after this 1900, of course, one benefit was because of improved medical also, that was also the reason. But now the growth is very rapid. This is USA's growth. 29, and there is a huge gap. More than 4 seconds, 5 seconds, 6 seconds, 7 seconds, 8, 9. After 10 seconds, approximately one baby is born in United States. In India, around 1.5 seconds, one baby. In China, around after 3 seconds. So I wanted to show you this. That is also a part of learning of higher education, not only the text, but we must learn other things also. Anyhow, so let us come back to our provision. Most of you must have seen this way of population presentation first time, I think. You must have studied it, but I don't think you must have seen it earlier. You have seen it earlier. If seen, it was fine. Otherwise, just I to share it with you. Anyhow, so 10th was bad debt. We are still at section 36, and my bad debt is over, and we are on the verge of completion of section 36. 11th point. No, 11th we have discussed, and 12th point. So 2 points I'm giving for self-study. Read the act Read it. 12th point, securities transaction tax. When securities transaction tax is allowed as deduction as an expenditure on the debit side of P&L account. So not every security transaction tax is allowed. You have to read it. Read from the act. Read section 36. And commodities transaction tax. These two I'm giving for you to read from the act. When you read the act, just type Control F and then you can write this word securities or commodities. Directly you will be sent to that clause. Read yourself. And now we have covered section 36. That's all for today. In the next class, we will start with section 37 expenditure. Goodbye. Those of who are having any doubt, they can please stay. Rest can leave. So tomorrow we will discuss the next section. Goodbye finally.